So let's continue with our discussion on audit evidence. When we're looking at audit evidence, we're not looking for absolute proof that something took place. What we're looking for is we're looking to be persuaded by the totality of evidence. Much of the information that we're going to be reviewing is less than perfect. For example, an estimate is exactly what it is, an estimate. So what we're looking for is understanding how the organization actually came to the conclusions that they have. When we're looking at evidence, we're looking at it from the appropriateness of the evidence. We're looking at it from the perspective of relevance. When we think of relevance, we're thinking of relevance from the perspective of, does the evidence relate specifically to the management assertion that we are reviewing? The other piece of the appropriateness is reliability. When we think about reliability, there are various stages of reliability, and again, we're looking to be persuaded, not absolute proof. Reliability is increased if the information is coming from an outside source. If it's coming from internal sources, one of the things that we need to consider is the internal controls. So are the internal controls within the organization appropriate so that we can consider the evidence as being reliable? Obtaining evidence directly by the auditor rather than indirectly increases the reliability of the evidence. For example, we'll be talking about accounts receivable confirmations, where the auditor reaches out directly to the customers to confirm account balances in accounts receivable. Documentary evidence rather than oral evidence is more powerful. As an example, if management says something is being done, well, that's good. But if we're able to prove that the item is actually in place through evidence, through documentary evidence, this increases the value and the reliability of the evidence. The auditor is always looking for original documentation. Keep in mind that original documentation in many cases does not exist. Many organizations will receive bank statements, invoices, and other documentation that is considered original, but this is going to be received electronically. So in cases like this, the auditor needs to consider several things. It's possible that the validity of the evidence can increase if the auditor is able to see the original email where the file is submitted. The auditor is always considering the appropriateness of the evidence. What we are looking for is we're looking to be persuaded by all of the evidence as we are assessing the management assertions within the financial statement. Now that we have a background related to evidence as well as the risk assessment model, I want to bring this together in terms of talking about how we actually use audit procedures and audit evidence in our audit. So you notice what we have is we have two main categories, the risk assessment procedures and the further audit procedures. You notice that the risk assessment procedures is to assess the risk of material misstatement. Let's go back to the model that we talked about earlier related to the audit risk model. The audit risk model includes both the inherent risk and the control risk to determine the risk of material misstatement. Embedded in our risk assessment is testing related to understanding the client and its environment, understanding what inherent risks are related to the client, understanding the political and environmental climate that directly impacts the financial statements, as well as, especially if this is an ongoing audit, we're going to consider what has actually changed since last year that is relevant to risks. Going back to the audit risk model, we also include detection risk. Now, when we're talking about the audit of internal controls over financial reporting, which we'll talk about later on in the course, we're talking about specific tests related to internal controls. When we're talking about the financial statement audit, we use the term substantive testing. Substantive testing is where we measure monetary misstatements within the financial statement. We're going to use analytical procedures, tests of details of account balances, transactions, and disclosure to determine if the financial statements are free of material misstatements. So let's be clear. In our risk assessment procedures, we are assessing risk. In our substantive procedures, we are measuring monetary misstatement. In our substantive procedures, we determine if the financial statements are free of material misstatement. Using the test of controls as part of our audit of internal controls over financial reporting, we determine if the internal controls within the organization are appropriate to reduce risk. Let's identify a couple of audit procedures that the auditor will be using during the course of the audit. In the risk assessment, we use this term observation and inquiry. Basically, it means we're asking a lot of questions and we are observing. So it's very possible that we will observe a very specific process within the organization to determine if the internal controls are working, if they're appropriate, and through this process we're going to be able to identify issues related to the risk within the organization. We use the term external confirmation. We had already talked about this very briefly. As an example, in our accounts receivable, we are going to have the customers confirm their account balances. A physical inspection of tangible assets generally is a part of the audit, as well as recalculation for mathematical accuracy, reperformance of procedures, and in a few minutes we're going to talk a lot more about analytical procedures that are a part of the risk assessment, substantive procedures, and the closing testing within the audit. Let's spend a few minutes talking about analytical procedures. Analytical procedures are used as part of the risk assessment or planning analytical procedures, where we're identifying risk areas within the organization and areas that we need to focus on during the course of the audit. We can also use analytical procedures as substantive procedures. Again, keep in mind that substantive procedures are these procedures where we are measuring monetary misstatement. We use analytical procedures as the final review prior to issuing our audited financial statements. When we look at analytical procedures, what we're trying to consider is how things have actually changed or how they compare to other values. As an example, we may consider values as they compare to industry standards so that we can identify risk areas. We may consider things in terms of change from prior year. Analytical procedures, primarily ratio analysis, to identify significant differences so that we can investigate these significant differences during the course of the audit. We develop an expectation of what these ratios should be based upon prior period information as well as industry standards, and we establish a tolerable limit. Any deviation from these standards does not necessarily mean that there is a material misstatement, but what we're using these ratios for is to identify areas of focus as we develop our audit plan. When we talk about analytical procedures, especially as it relates to our risk assessment or planning procedures, we're considering data from the perspective of how it relates over time as well as it relates to industry standards. Things that we might consider includes trend analysis, liquidity, leverage, profitability, perhaps our gross profit margin, activity, inventory turnover, days sales outstanding. All of these ratios give us insight in terms of how the organization is run and how it has compared to both industry standards and to prior periods. Based upon this information, we are able to plan our audit and identify or focus on elements that have been uncovered during this risk assessment process. We also identify the fact that analytical procedures are used as substantive procedures, procedures where we are measuring monetary misstatement. As we go through these lectures and we talk about specific business processes, we will identify specific analytical procedures that can be used as substantive testing. I thank you very much for your time, and I'm looking forward to our next discussion.